So the mortgage rates are at a record low, and scarcity of inventory are keeping the U.S. housing market robust in terms of demand. While affordability concerns continue to rise, low mortgage rates, rising savings, and a stronger job market all work together to put homeownership within reach of a large number of prospective purchasers. Now, however, the housing market, will it ever crash? Let's look at the most recent trends in the housing market prediction for 2021 and 2022. The housing market has particularly robust this year. The high demand for homes is almost every area of the nation. Now, the real estate market has emerged as a boon for sellers and a source of worry for buyers in the middle of this epidemic. Now, home prices have been increasing in the mid-single digits for many years. Recent double-digit price raises reflects the conventional demand of chronically low supply. Prices are increasing as a result of enough money on the sidelines and very low mortgage rates. Now, the improving economy and the approaching peak of home buyers years for millennials are driving a residential housing boom. Housing supply is now at its lowest since the 1970s. Due to millennial homeownership and other factors such as rising builder prices and real estate speculators snipping up starter homes, low mortgage rates with more work from home possibilities created a pandemic. So have also fueled a rise in home housing demand, especially in low density suburbs. Detached single family houses continue to be in great demand. These properties provide great living space and separation from adjacent houses than attached properties provide. All examined current real estate trends include price and rent increasing, housing sales, and supply. The state of the housing market for 2021, FMHPI, is an indicator for typical house price inflation in the United States. It indicates that home prices increased by 11.3% in the United States in 2020 as a result of a robust housing demand and record low mortgage rates. Growth is expected to slow to 4.4 in 2022, according to the forecast. The current Freddie Mac house price index in the United States is 248.1. That's July of 2021. According to Realtor.com September 21 National Housing Report, the market is moving in favors to buyers. Homes continue to sell quickly and listing prices continue to increase gradually over the preceding year. While active listing inventory is historically low, the gap between this year and last year continues to close. In September, weather-related disruption in a number of areas led to a year-over-year decrease in newly listed properties. This year's decrease is newly listed houses in the first 5 months. Home prices are now rising in the single digits, having passed their peak growth rates. These market trends point to a positive development for buyers as we enter a second half of the year. The median listing price in several metro areas are continuing to fall, owing to an increase in lower priced homes. New sellers are entering the market at near normal levels, and while property prices remain high, they may need to be considered pricing more competitively in the near future. The nationwide median listing price is an active listing for September was $380,000, up 8.6% from the previous year and up 20.66 compared to 2019. The median national price of active listings remained the same in August through September. In comparison, the previous year, large metros witnessed an average price increase of 4.1%, slightly higher than last month's rate of 3.5%. The nation's biggest metro slower price raise than the rest of the country. While median list price growth is slowing, this does not represent a housing market crash. However, the share of the homes with price reduction in September surpassed last year's level. The share of homes having price reduction increasing by 1.5% to 17.9%, just slightly higher than August share of 17.3%. However, share of price reduction is still almost 5% lower than 2019. While this is still within normal range, it may indicate that some sellers are adjusting prices more aggressively than they have in the last year and a half. The decline in time on market has slowed, but how homes are still being picked up rapidly as demand remains high. The time of typical listing spends on the market is beginning to correspond to seasonal patterns. The typical home spends about 43 days on the market this September, 7 days less than last year, as the number of newly listed properties is increasing. The sharp inventory losses of recent months have moderated. The net result has been a decelerating in the market of listing prices. Due to scarcity and demand, real estate will still appreciate at a faster than average rate through 2021, according to CoreLogic and data and analytics company Home Price Nationwide. Include distressed sales increased year over year by 18.1% in August of 2021 compared with August of 2020, marking the largest annual gain in the home prices in the 45-year history of CoreLogic Home Price Index. On a month-over-month basis, home prices increased by 1.3% in August 2021 compared with July to 2021. No state saw a year-over-year decrease in home prices. Either CoreLogic HPI forecast indicates that home prices will increase on a month-over-month basis by 0.3% from August to September, and on a year-over-year basis by 2.2% for August 2021 to August 2022 by the National Association of Realtors. This indicates the housing market is finally cooling down. It's dropping. If you can look at this this pie chart, basically it's showing you west is 21%, red, the green is northeast 13%, number 3 Midwest 23%, number 4 is the south at 43%. Existing home sales were expected to fall but remain elevated, averaging around 6.0 million units per year. Building permits and housing starts are at levels not seen since the previous housing boom. The popular belief is that this is still a good time to sell, and that ultimately means that the numbers of home sellers that hit the market are consistently increasing. This implies that while house prices are still rising, home sellers may need to consider pricing more competitively than the past couple of months. These latest market trends seen in July and August also point to a shift in the real estate activity, implying that we may have passed the peak of this hot housing market, which is good news for home buyers. The market is still heavily skewed towards sellers, but we may be seeing the first signs of return for a more balanced real estate market following the most active sales period in years. As of today, the housing market remains far more from normal. The inventory is falling for more than 33% over the past year. The current supply of homes on the market still remains historically low. With the recovering economy, more buyers are entering the market. This chart is actually showing in September, newly listed homes declined by 3.9% on a year-over-year basis. So if you look at September and then look at last September, this year in 2021, we have 393,288. And in 2020, we have 409,392. So again, that's just another overall indicator that the market is starting to slow down, and it is starting to become more even. Housing inventory in 50 states, U.S. Metro overall decreased by 18% fall over last year in September. Median existing home price rose at a year-over-year pace to 14.9%, as you can see on the pie chart. Housing sale trends in 2021. Homes for sale in August continue to sell more quickly than last year as buyer demand remains strong footing. Improvement, there are more than 1.5 homeowners 90 or more days past due on their mortgages, but who are not in foreclosure, still nearly 4 times pre-pandemic level. Serious delinquency rate remains elevated by more than a full percent point across all 50 states, with Hawaii and Nevada seriously delinquency rate remains elevated by 3.4% points. Though serious delinquencies remain significantly elevated, the share of mortgages in active foreclosures fell to yet another record low in June at 0.27%. So recent pullbacks in interest rate resulted in prepayment activity edging towards the first time of 3 months. So the statistic, the U.S. housing forecast foreclosure statistics for 2021, they have extended the forbearance and it's not a date on it. So basically the housing market is gonna cool off, and it is cooling off. We're just gonna have to keep an eye on it because we don't know if those properties that were in forbearance, if they're going to ever allow those to foreclose. But as of right now, that has stopped. So those properties will not come on the market. Mandatory government-backed loans, which most of the loans that have been going on nowadays are government-backed loans. So thank you for joining, and I'll see you on the next video.